Political posturing is weighing heavy on investors' minds as some now believe Italy is best placed for a euro exit. But is the ECB capable of carrying the burden of the 17-nation bloc? I'm joined down the line by Peter Vanden Houte, economist with ING, to discuss data coming out of the EuroZone and his take on the economic situation as a whole. Now, Peter, retail sales surprised to the upside with the January reading for the EuroZone showing a 1.2% improvement. But what can we take from these figures?
Yeah, well, it's definitely good news because better than expected. It shows that the consumer is not entirely dead in Europe, but then again, one has to qualify the figure because year on year it's still a 1.3% decrease. And also, if you look at the different countries, it was especially strong in some of the core countries, for example, plus 3.1 in Germany, but we haven't got any reliable figures yet for the bigger peripheral countries. Let's take, for example, Spain or Italy, and one can suppose that in those countries the growth was still negative. So all in all, okay, good news, but we shouldn't become over-optimistic either.
Some analysts believe we're edging away from the apex of the crisis, with Chinese economy beginning to gather steam, as is the US. In Europe, we have GDP figures tomorrow. If the figures disappoint, should markets be worried, or is early 2013 a bit like treacle? I.e., is this a hard slog that we just have to get through?
Well, indeed, we are seeing signs that the worldwide economy is reviving, and that's good news for the Eurozone, given the fact that the Eurozone pretty much depends also on external demand. But at the same time, I think any recovery in the Eurozone remains extremely fragile. The figures we are going to see tomorrow are the figures for the fourth quarter, so they are not going to give us much news compared to what we already know. What we've seen, especially in the last few months, is that most sentiment indicators, think for example of the sentiment indicator from the European Commission or the PMI, have been in general going up, and that's positive. But the thing is that most of this increase has been based, I think, on the improvement on the financial markets, on the better stock market outlook, on the lower risk premia, and this remains quite fragile and vulnerable. If market tensions would come back, I think that this recovery in the Eurozone could stall. So it remains a tricky story, and I'm not sure whether we already left the recession in the Eurozone at this time.
Now, how concerned are you about the situation in Europe in terms of politics? We're hearing opinion that investors are simply fed up of fiscal uncertainty. On the other hand, Italy's stalemate is now causing some to fear Europe's third largest economy may leave the Eurozone. But what are your thoughts?
I would say that's a classical problem. The Luxembourg Prime Minister Juncker already said it several times. He said, we know as politicians what we should do, but we don't know how to win elections with it afterwards. Having said that, I think if for Italy, for example, well, it wouldn't make much sense to leave the Eurozone because this would probably also threaten the existence of the Eurozone itself. But it's true that Italy is one of the few peripheral countries who didn't make much structural reform. If you're looking, for example, at unit labor costs, it has not been going down as it did in Greece or in Spain or in Portugal. So Italy still has to do a lot of reforms to become more competitive, and I think in the current political situation, this is definitely a big problem. I think the only good news is that the European Commission already announced yesterday that for some of the countries, the weaker countries, they will get more time to get their fiscal house in order. So that's good news.
According to some, Britain and Germany should be working together to medicate Europe. But instead, Britain is on the outside and Germany is getting little or no support. Would a less Eurosceptic Britain help UK's growth outlook and subsequently that of Europe as a whole?
It's a kind of catch-22 situation. For the UK is also very much dependent on growth in the Eurozone, given the fact that the Eurozone is one of the main trade partners of the UK, has every interest to have a stronger economy in the Eurozone. Now, if we look at the problems in the Eurozone, at the debt crisis and the banking crisis, a lot of those problems demand more integration and more coordination on a pan-European level, and that's something the UK doesn't like. So I think in a way the UK would be better off if they would collaborate a bit more, I would say, with Brussels to try to find a comprehensive situation for the Eurozone crisis.
The market is poised on the belief that central banks will stay firm. Do you think this will be the case, and can the ECB continue to carry the Eurozone burden?
So politicians don't move very fast, and that means that the ECB has to stand strong to try to support the Eurozone, and I think there's little other choice than continuing doing that, given the fact that we will see continuing austerity, slow or negative growth, and a weak banking system. And in that environment, I think the only possible thing the ECB can do is keep interest rates very long for a considerable period.
And finally, some believe that interest rate differentials drive currencies, that the economic situation in Europe will drive the ECB interest rate lower than the Fed, therefore driving the currency lower as well. But what is your outlook for the euro-dollar moving forwards?
We've seen that the euro had strengthened very much over the last 9 months or so. Since in July 2012, the euro became a lot stronger against the dollar, and that was basically on the back of this promise by the European Central Bank that they would do everything to keep the eurozone together to save the euro. And because of that, you saw that a lot of hedge funds that had short positions in euro, they actually started to buy the euro to cover their positions, and this gave the euro a boost against the dollar. Now, I think this movement it's petering out, so almost short contracts in euro have disappeared out of the market, and now it's more, I would say, fundamentals that are at play if we're looking at the exchange rate. If you're looking at, I would say, the equilibrium exchange rate for the eurozone, the long-term average, well, it's around 135 against the dollar. But given the fact that the eurozone is so much weaker and that you still have negative growth, whereas the US is already growing a bit more strongly, I think there's every reason to expect the euro to be a bit below, let's say, this equilibrium level. And therefore, our forecast for, I would say, for the next 6 to 12 months is that the euro will hover between 120 and 130 against the dollar. So our mid target is that we will see 125 in a few months' time.
Peter, your time and insights are much appreciated. Thank you. Well, that's all for the moment, but click back to Dukascopy for today's Commodities Corner with my colleague Thomas Taplin looking at industrial metals. Bye for now.